I'm going to take you today through a little journey on Bitcoin and regulation. Bitcoin and regulation is at the university here part of our 3x3 Fintech lecture series, and more generally it is widely accepted that Bitcoin is part of what is called today the fintech world. That said, we don't have a universally accepted definition of Bitcoin, of fintech. Fintech is defined by a number of people as finance and technology coming together, but from a legal point of view, it is not a specific set of rules which you could call in the traditional French acception of the word a branche du droit. So fintech basically, when you look at it from an economic point of view, it is a little bit easier to define it than from a legal point of view. And we see two trends which can be combined or can exist alongside. The first trend is that there's a number of fintech companies who want to compete with banks. Their objective is to replace banks, or to replace at least banks for part of their business, make them useless for part of their business and take over part of their business, and the others provide services to banks. That is the companies that would provide software, but also a number of entities that would be regulated and would, for example, provide payment services. What we also see from an economic standpoint of view is that we see companies moving from one trend to the other. We see companies that are being formed with the objective to compete with banks, and afterwards come to the conclusion that it's much smarter to compete with banks. As to examples of what from a legal point of view is covered by fintech nowadays, we have first of all payments. I'm going to talk about payments later. We have compliance solutions that are more and more automated in the AML world, but also in the risk world, generally speaking. And to make a little publicity for my friends at the SNT, they're very good at that. And we at the law faculty are working together with them on these type of innovative compliance solutions as well. Another example of fintech is crowdfunding, taking off in a number of European countries, not really taking off in Luxembourg. I'm not going to do a whole talk about crowdfunding, but suffice to say that in my eyes, the regulations are way too complicated for crowdfunding to take off. Another aspect of fintech today relates to lending. Most of you will be familiar with a company called Lending Club in the United States, which first of all was very successful, which is a little less successful nowadays. To put it in mild terms, we do not see the same trend in Europe, and I think that America, the United States, are ahead of Europe when it comes to lending and fintech. I'm not sure if the Europeans will catch up, but that's only my personal opinion. The correspondent banking system is a very good example because in order to transfer money, it takes time, it takes a great number of intermediaries, and it costs you a hell of a lot of money. And there's a number of fintech companies, blockchain-based, who aim at replacing the correspondent banking system, which in a way helps banks, but which in a way is also a threat for banks. We have the smart contracts notion. I think that it is Dirk who's going to speak about smart contracts here in a couple of weeks. Smart contracts are basically self-executing contracts. Contracts that execute automatically when certain events happen. For the moment, these contracts are smart in a way that they self-execute, but they're still relatively dumb in another way because they can only follow very simple orders, and we don't know exactly where this will go. Transfer of ownership, transfer of value. The university has inaugurated a share yesterday, of which Clearstream is also one of the sponsors, and the business of Clearstream is about transfer of value, and that is definitely also part of fintech today. When I'm going to talk about today's Bitcoin and regulation, I'm going to take you through a little journey of 6 points. So those of you that are getting tired, I'm going to take one point after the other so you see how close we get to the finish and to the drinks while I go on talking. The first question is, why should we regulate? The second question is, how should we regulate? The third question is, how to apply regulation. Tax is also an important aspect in that context, because depending on what answer you give it on taxation of Bitcoin related operation, it can have tremendous economic consequences. I'm going to talk a little about the developments at the EU level, and also about what's next. When I got first confronted with Bitcoin through my contacts at the MIT, which is I don't know, 3 or 4 years ago, the big question at the time was whether one should regulate or whether one should not regulate. And the question really was being asked at the time, are Bitcoin and regulation exclusive of each other? There was a whole trend, and this trend is still there, although it is not the majority trend anymore, which the position of which was to say you should not intervene, Bitcoin should not be regulated, the internet is free, Bitcoin should remain free. And when you're writing articles internationally about Bitcoin and regulation, you get all sorts of comments from people who say that all this is totally wrong, that regulators should stay away from Bitcoin. If you look up at this article and look at the comments, most of the comments are taking the position that regulation and Bitcoin are exclusive of each other, and that regulators should stay away from Bitcoin. Why should Bitcoin be regulated? I'm going to answer that question by addressing or pointing at some of the advantages of regulation. The first advantage of regulation is that you have a predictable framework. If in the European Union you're applying a certain directive or a certain regulation, you are in what we call a predictable framework. You know which rules apply, you know which rules don't apply basically, and you're not in what one calls the El Dorado of law, where it's basically the rule that whoever wants to do something does it and just looks at the consequences after, and no one really cares. So regulation gives you the predictability you need also to develop the business. Second advantage of regulation is that partners like entities dealing with Bitcoin to be regulated. We had a whole series of actors that in the very early days showed up in Luxembourg and in the UK, and they went to see banks, and they said to banks, well, we're working with Bitcoin, here's what we're doing, why don't you open up a bank account to us? And the banks answer unanimously, well, first of all, there's a number of banks that said we're not interested at all. Those banks that were more open-minded said, well, where's your piece of paper? Where's the license you have? Who is regulating you? We're not going to partner you if you're not regulated. And that actually, in a way, accelerated the trends towards regulation. It does not come as a surprise that the first Bitcoin exchanges actually were established in the UK, where the UK government had initially taken the position that Bitcoin activities were not subject to regulation. And that led to a whole trend of these actors moving into the UK. But then again, very quickly they found out that no bank would open up a bank account for them, and in the meantime the UK regulator has changed its position. Another advantage of regulation is consumer protection. You know which rules apply. You know that if you're dealing with a bank, you protect it in a certain way. I'm going to come back to that in a minute. When you're dealing with a payment institute or an electronic money institute, there are a number of rules on how to execute orders, how to compensate clients if orders go wrong, etc., etc. So consumer protection also comes with regulation. To be more precise, it should be customer protection. regulation also enables you to mitigate risks. One of the key features of regulation in 2016 definitely is about mitigating risks, which means that you need to draw up risk policies, that you need to draw up risk procedures which identify your risks, you rate your risks, you come up with concept notions and decision processes on how to address your risks, etc., etc. All that is a way of thinking, a way of doing business which comes with regulation. No one does it outside of a regulation world, or hardly anyone does it outside of a regulated world. Another example, one example of risk mitigation, but at the same time an advantage of regulating certain number of Bitcoin activities, is that you can apply existing anti-money laundering rules, and you can apply in particular those of the financial sector. So money laundering issues are also addressed through regulation. I'm going to go into the details a little later. Then comes the question on how do we regulate it, and there the first question, before even asking yourselves what do I regulate, is do I apply existing rules or do I invent new ones? And after having discussed that question, and you can already tell from the second section and the third section of my presentation on this chapter that the answer is to apply existing rules, I'm going to address the Luxembourg regulator's position, and I'm going to address the examples of France and Japan to illustrate two other examples. On the question whether to apply existing rules or invent new ones, existing rules are definitely more predictable. And second and foremost, the huge advantage of applying existing regulations and rules is that those activities that are regulated under existing rules, such as the Payment Service Directive, are passportable to 28 EU countries today, 27 tomorrow. So all in all, my personal view is that to the extent you want to apply a national regime, at least in the European Union, which is not EU stamped, you're going nowhere. The UK today is a little bit in between the two, because if I understand the licenses they have been granting correctly, and I'm not qualified under UK law, but still, if I understand these licenses correctly, they do grant licenses for domestic activities under the European umbrella, but they say that they're not passportable. I don't understand exactly what that means, but I'm sure our friends at the other side of the channel do understand what this means. The Luxembourg regulator has issued a statement on 14th of February 2014. So basically in the stone age of Bitcoin regulation, but it was a statement which basically covered the whole ground at the time, and I'm going to go a little bit into the details of that statement. First of all, the starting point of the Luxembourg regulator was to consider virtual currency as money. And that has a number of consequences in terms of regulation. The first consequence is that you attract a certain number of Bitcoin activities to the world of regulation. Had they qualified Bitcoin as a commodity, as Finland did at the time, they would not have attracted the activities to the world of regulation, at least at first sight and in the first analysis for basic Bitcoin activities. Had they considered virtual currencies as securities, they would also have attracted virtual currencies to the world of regulation, which is a whole range of other complications. I'm not going to go into the detail. Suffice to say here that virtual currencies are considered as money by the Luxembourg regulator, and by the way, this is a position which is more and more adopted by national, European and international bodies working in the area. In terms of what to regulate, the Luxembourg regulator said at the time, and still is of the view, that the issuing of virtual currency is not regulated from a monetary point of view, which means that the issuing of Bitcoin through mining is not subject to regulation. There you are in the virtual world. The virtual world doesn't touch the real world, and that is why the issuing of virtual currencies is per se not regulated. And it would be extremely complicated also as a national regulator to try to regulate the issuing of virtual currency, and the position of the Luxembourg regulator is very clear in that it says that as long as you're in the virtual world, you're not subject to regulation. But then, as soon as you're engaging in financial activities, that is where you need to apply for an authorization and obtain an authorization from the CSSF, a license in other words. That is where you need to be regulated. So as soon as your activity is an activity of a financial nature, you are subject to regulation. What does this mean concretely? At the time, in February 2014, it meant a certain number of things, but the regulator was still very prudent and said that the potentially interested persons should evaluate their business and then decide as to the proper status from a legal point of view, be it means of payments, be it payment services or the creation of a platform, etc., etc. In the meantime, and even more concretely, the widely adopted position in Luxembourg is that as soon as the virtual world, meaning virtual currency, touches fiat currency, meaning as soon as you are engaging into a business which consists in exchanging Bitcoin against fiat currency and vice versa, you are subject to regulation either under the Payment Service Provider Directive or under the Electronic Money Institution Directive. The CSSF has in the meantime issued one license as a payment service provider in the Bitcoin world, and the Electronic Money Institution, which technically speaking does not deal with Bitcoin but deals with blockchain, but nevertheless is part of the world of virtual currencies. By doing so, back in February 2014, the Luxembourg regulator provided the predictability I've been talking about in the beginning, and that is why also I think a number of the actors got interested in Luxembourg ever since. If you want to know more about Electronic Money Institute, here's an example, but I'm going to move on to discuss the examples of France and Japan. Remember, from a Luxembourg point of view, as soon as you're offering a service whereby you can exchange Bitcoin against fiat currency, you are regulated as a payment service provider. Other regulatory approaches are very, very similar to an extent. In France, for example, the ACPR, the Autorité de Contrôle Prudentiel et de Résolution, has decided that the activity of intermediation, which is the activity I have just been describing, providing services which enable you to exchange Bitcoin against fiat currency and vice versa, is to be considered as payment services. So again, the application of the same rules then in Luxembourg for the Autorité de Contrôle Prudentiel et de Résolution. Maybe we're lucky in Luxembourg that the only authority that has issued a statement was the CSSF so far, because up to now, and if you only look at the position of the ACPR, it seems relatively clear what is meant, and you will also notice that the ACPR issued its statements 2 weeks before the Luxembourg regulator. But then it comes a little bit more complicated. If you look at what the AMF has decided, the AMF says that cryptocurrencies are non-regulated currencies and that they do not fall under the scope of any of the existing regulations we know, and therefore the AMF proposes to define Bitcoin as various goods I'll let you decide for yourself what that means, but it certainly does not mean predictability nor a framework which we know how to deal with. I'm not going to leave it at that and just comment on the ACPR and the AMF. There's a report from the French Senate also, which goes back to 2014, which highlights the opportunities we have with virtual currencies, and that is not because innovation is a challenge for what we believe in terms of economy and in terms of sovereignty that we have to reject them, because, as they say, it will be very difficult to prevent them from being used. And by the way, another option would be to simply prohibit Bitcoin activities. But then again, if you're advocating for that position, you're adopting the Russian position and the position of the Chinese government, and probably that is not what European and American governments want. I'm open also a parenthesis here as to the United States. The difficulty with the United States is that you have to apply for a license in each and every state. So you have to apply in New York, you have to apply in California, you have to apply in Montana, you have to apply everywhere. This also means that the New York Bitcoin licenses, which are very successful, cannot be used in the rest of the US, and there's still diverging views in the US on where and how Bitcoin should be regulated. I'm not even talking about the position of the IRS, which is totally in opposition with the position of the New York regulator. Japan is also a country which is very open to Bitcoin, because the Japanese Diet passed a bill in May 2016 which mandates the regulation of Bitcoin and virtual currency by the equivalent of the CSSF in Japan. So a very open and proactive position. I've illustrated I've used this example also to show that a national law may be a solution. In Asia, you have a lot of exchanges that are established in Hong Kong. China is relatively negative on the use of Bitcoin, albeit when you look at the figures, you will see that Bitcoin is widely used in China. I'll let you find out for yourself why. Another example is that at the time there was talk that Greece would leave at least the euro. There was a rise in the Bitcoin, and there was a lot of activity around Greece also. At the time, a number of restrictions were put in place. This brings me to the next point of my talk, which is how do we apply regulation, and I'm giving you here 5 quick examples. First of all, on risk mitigation, I already addressed it before. If you're a regulated entity, you need to put in place risk policies, risk procedures. I've been discussing this before, so I'll leave it at that. I'm going to come back to the EBA paper in a minute when I'm going to illustrate the European context. AML-CTF, people very often say that, or many people say that there is a very high level of money laundering risk that is associated with Bitcoin. I'm drawing your attention to the report of the EU Treasury, or should I say a Treasury which is still a Treasury of the EU, who said a couple of months ago that the money laundering risk associated with digital currencies is low and not high. And that there are only a very few number of cases where digital currencies were used for criminal purposes. So all in all, the UK Treasury at the time came to the conclusion that the money laundering risk is low. At the same time, as soon as you regulate Bitcoin activities, you apply the anti-money laundering rules of the financial sector, which will enable you to mitigate the relevant risk. This is important because most of the onboarding of the customers is done in a non-face-to-face environment. I'm not going to go into details here. Just wanted to add perhaps that today you can onboard a client basically via camera in a number of European countries, including Luxembourg, Germany and others. AML solutions always call for a risk-based approach, and a risk-based approach also means that low amounts are less subject to anti-money laundering risk than high amounts. Most important point perhaps here is that tracking on the blockchain is easy. You can track the Bitcoin when it travels over the blockchain, so to speak. The only thing you don't know when you look at the blockchain is who's sitting behind all these addresses. But if you regulate the exchanges, which means that the customer of an exchange, as soon as the customer wants to convert the Bitcoin into fiat currency, he has to register with an exchange. And if that exchange is regulated, then the exchange knows who the customer is. So we have a fantastic tracking tool, which is the blockchain itself. And let's assume that tomorrow we will have 6 or 7 Bitcoin exchanges in the world, because my prediction is that we will not have many more. Let's assume that we have 6 or 7. Let's assume that all these 6 or 7 are regulated. Then not only can you track on the blockchain, but you also, meaning here the law enforcement agencies, know who's behind all these addresses. All of this to say that the statement which some people make in saying that there is a substantial AML risk associated with Bitcoin is a little bit short-sighted in my eyes. It's a little bit more complex and a little bit more complicated. I'm not saying that there's no anti-money laundering risk associated with Bitcoin, but if you regulate the key actors, you can mitigate that risk, and the risk then is not higher than with other payment methods. That is a very important point, which also has come up in the European area over the last months. I've been addressing consumer protection, customer protection. A few examples here from the law is that if you're a payment institution, there's transparency on the charges. You need to tell your client which fees you charge. Your client needs to consent in an agreed form, so you need to find an agreement with your client on how he consents to a certain operation. There are rules for unauthorized transactions, there are rules for liabilities and refunds, etc., etc. So a whole set of rules which address potential problems that arise when the exchange operates. And by deciding that these exchanges are subject to the payment institution law, you ipso facto declare all of these rules applicable. Capital base and own funds. If you're a regulated entity, the regulator requests you to comply with certain requirements in terms of own funds and capital. The own fund methods can be found in the law. It's methods which are more or less complex financial calculations, but which basically relate to a percentage of the overhead or a percentage of the turnover, to put it in simple terms, which means that if you're doing business for 100, you need to keep own funds of a certain percentage. The capital base is a capital base which is drawn on past experience. I'm not telling you any secrets here, because these capitals can be found in the articles of association of the companies that have been granted licenses recently. Those of you that are working in the payment industry know that the 600,000 or the million is much higher than the legal minimum. So you see that the regulator, who is very open towards innovation and towards Bitcoin, at the same time puts a number of very strict requirements in terms of share capital in the interest of the customers of the company. IT systems and security. I could spend probably an hour on that, but I will only spend 30 seconds on it. If you're a regulated entity, you need to comply with the rules on control and segregation. And in the background, we have the whole question to what extent actors of the financial sector are able to rely on cloud solutions or not. I'm going to leave it at that today on that specific point, which we will for sure, we meaning here in Luxembourg, the industry, academia and others, discuss in the months to come very intensively. A little note on tax. What is the tax treatment in relation to Bitcoin activities? Also, to put in very simple terms, if you consider virtual currencies as money, there's no VAT, no direct tax applicable. If you consider virtual currencies as a commodity, as Finland did in the beginning, obviously any profit that is being made is subject to taxation, and also there's a little misspelling here in the presentation. If you consider virtual currency as money, there's no direct tax on it and there's no VAT on it, because that is what the European Union, the Court of Justice, has decided a couple of months ago. In the middle it should say, if you consider virtual currency as being something else than money, and this one should be here, you're going to tax it. But again, the decisions that have been taken by the European Court of Justice are also based on the notion that Bitcoin is money, and it is only that definition which also enables an adoption of Bitcoin. If you were to take the position that Bitcoin is a commodity, the tax issue alone will prevent adoption of Bitcoin. We have a number of developments at the EU level as well during the last 2 years. The first one was the opinion of the EBA, which aimed at a comprehensive regulatory regime. Those of you who have looked at their opinion will see that it focuses on the risks and on the disadvantages, but at the same time it says that banks are authorized to maintain business relations with virtual currency actors. The opinion is generally analyzed as a relatively restricted and negative opinion, with the exception of the last point here, which says that banks nevertheless are not prohibited from entering into business with these actors. That is for the European Banking Authority. The details are here. The Council of the European Union has decided back in November 2015 that virtual currencies should be subject to AML/CTF regulations. That means that they are just one step short of the Luxembourg position. They say that virtual currency actors, not the virtual currencies themselves, should comply with anti-money laundering rules. The 20th November 2015 was shortly after the Paris attacks. But again, it's exactly the position the Luxembourg regulator took almost 2 years earlier. We have the European Commission, which shortly thereafter has decided to reopen the 4th AML directive, because the 4th AML directive had just been adopted. It had been reopened to include virtual currency actors into its scope, and the European Commission is also in favor of applying payment services rules to virtual currency actors, which again is the position the Luxembourg regulator has taken 2 years earlier on. On the second point, on the first point, there's unanimity on the European level. On the second point, there's not yet unanimity at the European level, but still there's a very clear trend in the Commission to apply payment service directive to virtual currency actors, and in months to come will tell us where this goes. But again, even if they would apply specific rules, it would be European rules, so it would also be a predictable framework. Here's for the details. The Council has in February endorsed the Commission's action plan and called for rapid actions. Those of you that are familiar with Brussels know what this wording means, Mr. Mackel. The amendments to the 4th Anti-Money Laundering Directive I have been addressing have been adopted in July this year. So the example I have been giving of the 6 exchanges that are subject to anti-money laundering rule is going to be the state-of-the-art is going to be translated into law in the European Union pretty soon, because the AML directive is supposed to enter into force next year in all countries. We have a report from the European Parliament, which is a very interesting report. The report is very much open towards virtual currencies, very positive about virtual currencies, also defines virtual currencies as money. Again, the same definition the Luxembourg regulator adopted 2 years before. It's a pro-regulation approach. It calls for smart regulation which fosters innovation and should safeguard integrity. A report which in the discussions at the European Union level carries a lot of weight, and the person behind it was a liberal parliamentarian from Germany called Jakob von Weizsäcker. So the European Union in May has endorsed the views of von Weizsäcker. What's next? What is the future going to be in the area of virtual currencies? I see two very clear trends. I'm not going to go into great detail here. Maybe we can address them when we discuss the questions later on. At the EU level, it is pretty clear to me that virtual currency actors will be subject to the rules of the second payment directives, which means that just like what Luxembourg decided 2 years ago, at the European level, virtual currency actors will be subject to the rules the normal or traditional payment institutions are subject to. This is not only a trend, it's a quasi certainty. Whether there's going to be specific rules that are going to be put into PSD2 or not is a different question, but the trend is very, very clear. Another trend is that virtual currency to virtual currency exchanges also will get attracted by anti-money laundering rules. If we're talking about virtual currency to virtual currency exchanges, unlike my examples before, these would be exchanges where you would exchange, for example, Litecoin against Bitcoin or Dogecoin against Bitcoin, all of these other virtual currencies, which, if you remember the CSSF's position, are out of scope when it comes to the financial regulation. And in theory and at first sight, they would also be out of scope as regards the anti-money laundering rules, in terms of identifying clients, in terms of transaction monitoring. But at the same time, if you look a little bit deeper about what anti-money laundering is, you can also be a money launderer as a perpetrator or as accomplice without being subject to the financial sector anti-money laundering rules, which means that the virtual currency to virtual currency exchanges are going to get attracted to the world of regulation in a way which probably doesn't suit them really, but that is going to come as well. I do believe that the law enforcement agencies and actors will not hesitate to enforce also against these actors if they participate in anti-money laundering activities. We see new currencies coming up. Those of you that follow the news know what Ethereum is. Ethereum is a new virtual currency which was a big hype 3 or 4 months ago, which is more than one, I wouldn't say a big problem, but which has some problems today. And XRP is the virtual currency issued by a company called Ripple, which is also one of the new currencies that we will hear more about in the years and months to come. For the moment, and so far, the products I have been illustrating are very simple products. So we're dealing with Bitcoin, which is something very new, but at the same time, exchanging Bitcoin against dollars or Bitcoin against euros is something relatively simple. And yet, it took 2 or 3 years for the regulators to get their act together, which is normal as well, because these things take time. But we will see more and more sophisticated products, for example, margin trading or leverage trading on Bitcoin, which is financial products on Bitcoin. And if you qualify Bitcoin as money, as we did before, this has a number of consequences when it comes to margin trading or leverage trading on Bitcoin. This is the next big regulatory challenge on whether the market infrastructure rules are going to apply. Namely, that is the rules which the Bourse, for example, is subject to. All of these things are being discussed as we speak. There are no regulatory answers. The beauty of dealing with Bitcoin and regulation is that there is a new challenge every day. I hope that I've been able to highlight a few of these challenges today, and I'll leave it at that, and I'm happy to answer your questions under the auspices of our media law professor and specialist in data protection, Professor Mark Hole. Thank you very much.